What are you looking for in this week's earnings, Jimmy?
Good morning, Contessa. We're positive on tech, and we think that especially when we've had opportunities to buy tech on dips, it's obviously been a age-old saying, buying on the dips might be a good idea, and it has been. And we think when we get future volatility in the future, that would be the same. And really, earnings have been the story with good sales and slow payroll growth means that companies have been able to maintain great margins, and we're expecting, double-digit earnings growth in Q3. So we think earnings will continue to be solid.
Margin, in fact, your word of the day. We're glad to see it. What sector do you particularly like right now? Where do you think that there's some room to run?
We like the cyclicals. So we like financials. We like industrials. We think that those areas, such as small cap stocks that have been rallying since the lows of April, will continue to do well as well, into the future. And so we think broadening is another word that you could use, that we think will come with lower rates, which we would think, now with the Fed probably cutting at least 2 times now, more, that investors are really looking at potentially the S&P 500 setting 7,000, which is unheard of if you think about it, in the lows of April. And we've been in the non-recession camp all year long, and we think cyclicals will do well.
You're seeing the Russell 2000 up 1.2%. Those small caps since April are up almost 40%. That's a lot of exuberance for the run on stocks. What's fueling that particular movement?
Well, we're really in a Goldilocks type situation with, the Fed lowering rates in a low rate environment. Investors are going to be bullish on risk assets such as stocks. We're going to see other areas, I believe, of the market participate, like I was saying before, outside of the big mega cap tech trade. And we still like tech, especially when we get volatility. And so I think a lot of investors are thinking about potential deregulation that hasn't really even kicked in yet in some areas, and really bullish on the idea that equities can go higher, and the idea that, that we can have a little bit of a bubble, and that institutional investors really haven't played into this bull market as much, with as much dry powder and cash on the sidelines, are all things that bode well for potentially stocks to go even higher.
At residential housing, I see that you think that could move sentiment as well, yeah?
I do, and negative sentiment's been a good thing for us in terms of being bullish on equities. But one thing that I think really could shake up the investor psychology to the positive would be, as rates come down and as we see mortgage rates continuing to go lower, when the residential housing market unlocks, we think that could send a lot of good things in motion.